There's a whole lot of confusion going on about what's going on with Nvidia and renting back chips. No, they're not buying back chips, but renting back chips. What's going on with DGX Cloud, and what's going on with this material service agreement with Nvidia? Because, see, yesterday I made a video on this topic, and there were a lot of people that seemed to really misunderstand what's going on. I think there's a chance maybe they only watched 2 minutes of the video, came up with a conclusion, and then left, which is really their loss because not a lot of people are actually talking about this. I feel like, once again, I'm early and I'm one of the few people talking about this. Like, for example, there's this one person said yesterday, what are you even on about? Are we reading the same filing? This isn't proof of oversupply. It's just a contract clause where Nvidia shares some downside risk if utilization drops. Okay. Then I said the filing literally says CRWV entered into a new order demanding Nvidia buy unused compute. And the person replies and says, yes, the filing says Nvidia has to cover unused capacity. That part is true, but it doesn't prove oversupply today. It just shifts some risk back to Nvidia. Yes, but you have to realize this is the first time we are hearing about this with Nvidia. We never knew that these agreements existed to the point that in 2023, apparently, we have this material services agreement from 2023, which is now being activated. That's the key, right? You have to understand it's now being activated. CRWV isn't just reminding you, hey, we have a material service agreement where Nvidia is going to buy our unused capacity. CRWV is literally saying, hey, Nvidia, we can't sell this. We are potentially oversupplied, which is implied when they can't sell capacity they have. Like, hey, we have too much. We can't find buyers for this server technology. You need to buy it. So we are entering the order for you to buy it. That is, by definition, either a sign that CRWV sucks at selling, which is possible, or there's oversupply. So yes, it doesn't guarantee there's oversupply, but it's an early canary. It's an early red flag. And we'll get the full material service agreement when the next earnings call from CRWV comes out, which is expected to be between November 12th and 14th. Barron says the 12th, so I'm going to go with the 12th to be safer on that side. Now, why is this such a big deal? Well, it's such a big deal because it's also coming at the same time as Nvidia is also agreeing to rent back from Lambda over 18,000 of its own chips, which you think, okay, well, that's probably because they're building out their own data centers, right? But they've been scaling back their own data centers. Now, this is so fascinating because think about this. Nvidia has been pitching the DGX Cloud that, hey, in August of 2023, Jensen tells us that DGX Cloud is an enormous success. Then in late 2024, we hear that this enormous success generates $2 billion of annualized revenue. Well, that's less than 2% of the money they make from chips. Then in 2025, we're not going to spend any more money building out our own cloud infrastructure, which, remember, cloud infrastructure is warehouse, utility power, InfiniBand network connections. It's a lot of infrastructure, chip stacks, that could be partly their own. And then, of course, server racks. There's a lot that goes into this. And then you have to manage it all, right? It's a lot of work. But now all of a sudden, September of 2025 comes around and we hear from Nvidia that they're no longer prioritizing DGX for external use at all. Instead, we'll just go lease from other cloud service providers. And this is where things and people start scratching their heads and go, this feels a little circular, because on one hand, you were telling us that DGX Cloud was such an enormous success. Your own Nvidia data centers were such an enormous success. And now you're telling us, yeah, we're not like that was an enormous success and it was good revenue, but it's less than 2%. We're not going to focus on it. We'll just use it internally. That's the argument now. Is that we're just using our own servers internally to design chips and to work on CUDA. And in case you're wondering why our commitments to leasing chips are skyrocketing, we're releasing our own AI chips back from the likes of Microsoft, Oracle, and CoreWeave, as reported by The Information. Don't worry, this is totally normal. We are doing this because we need the technology. Okay. Or it's potentially because it makes more sense to recognize the revenue and then be able to buy back your own stock because it makes people inside and holders of the stock very, very rich. But it does create serious concerns that the start of oversupply has begun. Now, consider this. When it comes to this Lambda deal, I want you to think about this. Nvidia agreed to rent 10,000 of its own chips from Lambda. for $1.3 billion over 4 years, and another $200 million deal to rent another 8,000 chips. So recognize how this works and why this makes so much money. And this is why people get pissed off when you call this stuff out. It makes massive money because Nvidia gets to recognize the chip sales immediately. If you enter into a chip purchase with Nvidia, Nvidia gets to recognize the revenue immediately. They recognize the Nvidia and the revenue right away, and they recognize the margins right away. So it's kind of like you selling lemonade for $100 and then promising to buy back 1 cup of lemonade for $5 every year for the next 7 years. Okay, well, you still only paid back 45, but you got 100. You got 100 today, and you gave back 45 divided over the next 7 years. It's a great deal for Nvidia because Nvidia gets the revenue today, recognizes the margins today. It gives some of that back to Lambda. Lambda goes public. When Lambda, like CoreWeave, goes public, what do? They raise money, and then they can use that money to buy more Nvidia chips. It's extremely circular, right? That's why people start wondering, is this bubbly? Because look at what Lambda is forecasting. Lambda is forecasting that, well, they're telling us they had 114 million of revenue in Q2. That's a little under $500 million of annualized revenue. They're estimating to double to $1 billion of revenue by 2026. That could be reasonable. Could be very, very reasonable. But would it be reasonable then to say we're going to 20x after that? I don't know. Lambda is literally estimating that they are going to 20x by 2030. But wait a minute. In order to double, we're already relying on Nvidia leasing back the very chips that we are buying. That's to get to a double. Now we're supposed to expect that Lambda is going to 20x from here. I thought this random comment put it very well. When there's no killer app, money needs to be cycled around. And that unfortunately seems to be a little bit of what's happening here. And it's pissing off a lot of people who have big allocations to the chip plays. Mind you, I have a bunch of exposure to Nvidia as well. I promise course members that when I sell Nvidia, they're going to be the first to hear. I will send out an alert to my course members in our alpha report, just like we do when I buy stocks in the top 10 stocks to buy list. For example, I've been sending out alerts on, there was a company that just recently IPO'd. I almost never buy IPO companies. We bought this IPO company. We did fundamental analysis together. We sent out the alert to buy it. That stock today, it's been like a week now since it's IPO'd. That company today is up another 13%. This is based on the fundamental analysis that we do and the technical analysis, and those are the kind of calls that we like to make. And then when I send an alert, I send it to members. In the alpha report last week, I'm buying this stock, I plan to buy more, I'm buying this allocation now, and then I even bought the dip on it soon after that. And now it's way up from there because it, was expected to be volatile within the 24 hours after IPO, very normal. Now it's way up, which is exactly what we expected. Anyway, my point is, I'm not trying to be negative on people making money. I want people to make money. I want you to make money. And as an Nvidia shareholder, I look at this and I'm like, some of this stuff makes me nervous. You guys are expecting me to believe that you can 20x your data center, but you're already forcing Nvidia to buy your excess capacity at Lambda and at CoreWeave. And you're walking back from running your own data center for external use because you're realizing that's not where the money is being made. And yeah, we'll just use that internally, which is a nice cop-out. But we also don't know how much Nvidia uses themselves versus rents out again. I'll give you an example. Let's say Nvidia rents, back 100%. So whatever they rent back $10 billion worth, right? Let's call $10 billion 100%. Well, maybe they rent out 30% of that to somebody else, they re-rent it basically, and maybe they use 10% themselves. They're still losing, 60 to 70% there. We don't know what that number is, but it's a red flag because it's likely to lead pricing to go down over time. Now, hopefully not, but it is likely to lead pricing to go down. And that's the concern, that Nvidia actually went from, in my opinion, being a company which is what made me so excited about them. They went from a company that could recognize the revenue and not be a bag holder to literally committing to being the bag holder. And this CoreWeave 8K, I think people are misunderstanding it. They're being blind here to this being a red flag. Like, I can be bullish Nvidia and I could love the margins of Nvidia and I could love what Nvidia does as a company, but I can also recognize that this is a red flag. And I can also recognize that people are, shilling without letting their brains realize this is bad. Like somebody in the chat earlier, this jackass in the chat earlier, he's like, "Oh, Kevin, you sure like it when they buy back their own stock, don't you?" And I'm like, first of all, you're acting like I'm trying to be like sinister or like do something greedy or whatever. I'm providing you perspective, as I usually do on this channel, that hurts me, right? As an Nvidia shareholder, me pointing out a red flag of Nvidia hurts me. And I don't cheer the buybacks. I actually see the buybacks as a red flag. The company's so good, don't do buybacks. Invest more into better equipment or infrastructure or whatever. If the data centers are doing so good, instead of buying back the stock, go build data centers. Do something productive with the money. When you're buying back stock, what you're doing is you're trying to prop up the stock valuation so insiders can get rich or shareholders can get rich. Or you just end up using that money to conduct equity investments into the smaller data center place to keep the pawns going. That's what makes me concerned, is that there are early warning signs that there's a pawns. Now, how do you play that? Well, in my opinion, with a trailing stop. Like, I'm not like rushing to the exit on Nvidia, but I'm going to be aware of this because where there's smoke, there's fire. And when it starts, it usually doesn't get better over time. Hopefully it does. But again, I want you to recognize that sometimes you get these sort of like bots in the comments that are just like blind to real issues. Like there was another one yesterday. Who was it? Like I personally think this is a pretty important inflection point to pay attention to. And then this person, I think they legitimately didn't listen to the video at all, but they make it sound like they're smart people, right? This video is theoretical at best. Nvidia has not bought back any chips. They're just insurance for CRWV in a shit hits the fan scenario. No, they're not. This is not in a shit hits the fan scenario, because if it's a shit hits the fan scenario, guess what? It's happening right now, because CRWV in their filing says we are pulling the trigger on demanding Nvidia purchase unused capacity now. This is not some contract clause for maybe. It is we are doing it. A. B. I never said Nvidia is buying back chips. You didn't pay attention, homie. Homie Nate. So your comment is what's theoretical because you didn't even pay attention to the content, which is sad. And I think this is where people don't realize there are and can be red flags. That doesn't mean that we're going to fall off a cliff, but it does mean we should pay attention to these things. Now, Barron says that we are going to get the copy of this MSA on November 12th. I previously said that was November 14th or 15th. That was based on when I thought the CRWV earnings were to be. Barron says it's actually going to be on the 12th. So I highlighted that right here. You can see that on the screen right here. So I adjusted my calendar, and I encourage you to adjust your calendar as well. But again, my POV is let me provide information, to give perspective on what could be a real issue. We don't know if it is. Everything could be just fine. But it is something where what this sets up is a precedent that anybody in the future who is going to buy chips from Nvidia deserves a guarantee from Nvidia. But eventually you can only provide so many guarantees, right? The bar to provide guarantees is going to get higher and higher and higher. Soon, your next data center plays are going to go, hey, I don't want an agreement that you're going to buy my, unused capacity through 2032. If I'm going to spend $10 billion on a new data center, I actually want you to buy back my unused equipment all the way through 2040. That's where it's an issue. Tiro here says, why is CRWV buying more if they have unused capacity? That's the thing. CRWV gets to be frivolous with their investment because Nvidia guarantees it. So why is Nvidia buying more, or why is CRWV building out more? Because they just dump it all on Nvidia in a circular motion. So it doesn't matter if there's unused capacity. That is the definition of malinvestment. That's crazy. That's crazy. So again, I'm not saying this is a near-term pooper-doopers, okay? I'm saying this is a long-term potential issue. Not near-term, it's a long-term.
Poopy doopy.
For now, it might very well continue to be a bullish catalyst. And we like that. But remember, there are some things to remember about Kevin.
Kevin's somebody we'd consider. Kevin is fantastic, too.
Kevin is very talented, but I don't know if it's going to be him, but he's a very talented guy.
You know?
Kevin is much more interested than most people, by the way, in the balance sheet.
I'm just saying. All right? So these are things to pay attention to. If you want to know what I sell, I will be very, very clear about when I sell my Nvidia stock in the Meet Kevin membership. Come join us this way. In the Meet Kevin membership, every trade alert, all 8 courses, every private live stream, every alpha report, you get it all in the Meet Kevin membership.
Right? Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.